Hi everyone, and welcome to another episode of Market Intelligence Campfire TV. My name is Matt, an ex-recruiter, now dealing in the analysis of the market and digging into the macroeconomic data. I've been doing this for over 5 years, I'd say, give or take a few years. Just really interested in patterns, really interested in the macroeconomic data in terms of what's happening around the world, and trying to give you guys a little bit of bite-sized information in order to digest and analyze for yourselves. With me, there is a special guest, Imre. Imre, yeah, give us a quick introduction and we'll go from there.
Hey, Matt. Thanks for having me, and hello, everybody. As Matt said, my name is Imre. I've been trading professionally for over a decade now. Currently, I manage a combination of proprietary funds and investor funds as well. So I am running a hedge fund with a business partner of mine, legendary Wall Street trader Andy Krieger. My specialty is in global macro. That's the type of strategies that our funds run. We express our ideas primarily using options, but I do trade in the spot market as well. I'm a multi-asset class trader, but the concentration for our fund right now is in equity index futures and options on those futures markets. Good to be here.
Yeah, awesome. I mean, listen, there's so much to talk about this week in terms of what's happening, both from the news side and from the data side. And next week, I think is going to be an even bigger event. So yeah, let's try and get straight into it. In terms of what's happening on the market, in terms of the data that's come out this week, on Sunday we had a little bit of a positive data from the Chinese side, and the inflation has decided to come back up ever so slightly to 0.2% year over year. Yeah, I mean, the Chinese economy is still in stagnation. I'm not seeing anything in particular that I can go and say, yeah, listen, we're seeing a big rebound in the Chinese market. I think once we see that, once we see a pretty good rebound, I think at that point we can sort of say the recession is over. And if the Chinese market is growing and inflation is slowly rising in China, that means, there's more demand in terms of purchasing power and so on and so forth. So, yeah, I mean, on Sunday, nothing in particular, nothing to say, wow, those numbers are amazing. I mean, have you got anything to say in terms of the Chinese CPI?
No, not really. It will be interesting to see, however. So the thing with China is that their economy can't really grow in a vacuum, right? It's just the nature of
Yeah.
where their frankly their revenues come from. They're still the world's exporter. So what's happening in China, I want to take it with a big grain of salt, just based on I think what we both see happening around the world, which is going to be a gradual slowdown. That doesn't mean that I don't think we're going to see a sudden complete reversal in global economic growth, but I can't help but think that it's coming. So I'm taking these Chinese data prints with again a grain of salt. Chinese markets aren't something that I typically trade anyway. If I do want to get exposure to China, I'll typically do it through a proxy like the Australian markets, whether it's the Australian equity markets, the Australian currency. That's historically been my preferred way to play it. I could look at Chinese listed equities elsewhere, but again, that's just not personally my bag.
Yeah, no, and that makes sense. I mean, speaking to a few people, within the markets, yeah, they tend to, I wouldn't say avoid the Chinese market right now, but yeah, I don't think anyone has got an appetite right now to say, yeah, let's see if we can make a bit of a bigger run in terms of that. So yeah, as I say, the data's sort of reflecting what's happening in terms of its overall, as you call the appetite. I think, yeah, we are miles ahead in terms of, well, we're miles behind in terms of what's potentially happening in the next 6 to 12 months. So, yeah, it'll be good to pay attention to later on down the line. But for now, It's one of those. I mean, on Monday, nothing really happened. Nothing came out that really interested me in terms of data. Yeah, there were a couple of Fed talks to say, yeah, the inflation is too high, so on and so forth. But yeah, I mean, they've been saying that for months, and it depends on the Fed as well. Couple of Feds are being super dovish, and they said, they want to cut by another 50 basis points. You've got a couple of extreme hawks that do want to even, raise the rates, which I think it's more appropriate. And then you have, those who are sort of in between, sitting on the fence, not knowing what to do. So, yeah, on Monday, nothing really happened. I mean, did you catch anything on Monday, Imre, or?
No, I mean I'm looking very much to the future there. I
Yeah,
do think rate hikes are inevitable,
yeah,
but it's also important to understand that monetary policy in this context, this very specific context, is also a tool of political leverage, just
yeah,
because again of the massive exports, right? So
yeah,
um, cheaper currency makes those exports more competitive in foreign domestic markets,
yeah,
and they're it's not a good situation. It's not a good situation to let the currency continue to slide. It's not a good situation necessarily to hike rates right now and reverse some of the insane growth that has happened.
yeah,
So it is what I would call a bit of a pickle, but I don't think there's any real urgency to act right here, right now. That said, when you look at the overall broader market context, especially in American equities this week, you could argue that natural and historic market correlations are kind of doing a lot of the heavy lifting for the central bank.
yeah, yeah, yeah. No, I agree. And I think we are getting to the point where I think um, I want to say the people, right? But the retailers are slowly but surely waking up in terms of what's happening around the world and what's really happening, in terms of the US economy. We had the secretary come out with a speech to say we're never going to see the October numbers for both CPI and retail sales, and I think there was a few other statistics that they weren't going to ever release. And I think I quite find it quite funny, 40 days in lockdown, and what you're telling me that they can't go back in time and look at historical data to, gather average inflation numbers, which they have been doing for the past, God knows how many years. Yeah, I find it, kind of funny. I mean, have you listened to, the speech by the press secretary, or not really?
No, I can't listen to her. I saw the comments. Uh, I saw the comments, and that was enough. I mean,
Yeah,
use your brain, people. If the
yeah,
numbers were amazing, this
yeah,
administration would be in a rush to
yeah,
release them. At,
yeah.
at the risk of sounding a little bit crude, I've never seen a more self-fullating administration in my life. So if the numbers were amazing,
Yeah,
obviously they would be in a rush to get them out. So the fact that they're not getting them out, it doesn't take someone with particularly above average intelligence to conclude that things are awful.
yeah,
I mean, that's like the
yeah,
only logical conclusion. And to your point, if they physically can't release the numbers, what does that tell you about the competence of the
yeah,
people working in that department? Like
yeah.
that's also not good. That also doesn't engender confidence. So no matter how you slice it, it is not exactly a good look.
No, no, definitely not. I mean, yeah, if they can't do simple calculations on, the CPI numbers, and between you and me, I think the numbers are botched anyway. When you look at the cattle prices and you look at the egg prices and so on and so forth, how much they've risen versus, the actual inflation numbers, things don't add up. From my perspective, looking at statistical data and looking at the laws of averages, it doesn't make sense at all. Even with the numbers that we are seeing, which are, I'd say, elevated by the targets, quote unquote, the 2%. We are at 3% inflation. I believe the real inflation is around 6%. Regardless, right? It's one of those factors that we all have to take into consideration when we are listening to those, people speak and say, yeah, we won't be able to, we won't be able to provide the numbers for X and Y month because of so on and so forth. And yeah, I think that this particular administration is very strong on narcissism. And if the numbers, as you said, were great, they'll be all over it. The next day, we'll see all those numbers pop up, and and everyone would be saying, how great this administration is. But it's not the case. So we are where we are. Um, Listen, on Tuesday we didn't have anything special. UK numbers came out. Shock horror. Not one of those numbers were positive in any stretch of the imagination. Unemployment numbers above 5% now. Again, the real number for me, I think, is about 7%, just based on the ISM data and how many months the entire economy was in was essentially in contraction, right? Well, manufacturing and the composite data was showing that. So again, take those numbers as you will. Again, all negative. And we've had a few conversations about UK. Nothing has changed. Still in dire situation. Europe, in terms of Germany, data came out. Whatever, still negative. Still in dire situations. The only thing that's holding the German economy is the defense manufacturing with Rheinmetall and a couple of other manufacturers that that provide weapons to Ukraine and whatnot. They're holding on, but apart from that, we had a month ago we had those Porsche and Volkswagen earnings, and yeah, it was a disaster. Misses everywhere, and we're not talking maybe 2%, 3% miss. I think Porsche had like 30-40% miss on the EPS and the PE. Same for Volkswagen. They're talking about closing plants. So yeah, it's one of them. ADP number was the most interesting one, right? We had this positive ADP coming out. I think it was a couple of weeks ago, right? Was it a couple of weeks ago, Imre, or it must have been maybe a
Yeah,
month ago now.
I want to say that's correct.
Yeah, something along those lines, right? And yeah, it was positive by 35K. I yeah, I'm not going to take those numbers seriously. Even the ADP employment change 4-week average, you're losing 12,000 jobs, which is crazy. People will blame it on AI. I don't think so. I'm blaming it on the slowdown of the entire economy. I mean, what are your thoughts on the unemployment rising at rather fast rate? I mean, do you blame it on AI, or do you think that there's more things at play here?
I mean, that's a very difficult question to answer, and this is just pure conjecture and speculation on my part. I think to say that AI is not responsible in any way is probably not true. The issue, and I've heard this anecdotally from people who work in professional services, whether it's as lawyers, particularly as lawyers actually, but even people who work as software engineers and developers. The common theme that I'm hearing is that AI is redefining how the most junior rung on the ladder does their job, and how a lot of the functions that you would task, for example, a junior lawyer to do can in fact be done with AI at a much more efficient rate, and obviously a much cheaper rate. Now, that doesn't mean
Yeah,
that AI can replace that person altogether, but if you have a situation where a lawyer says, I could ask a junior to do this, they don't know how to do it. They have to be trained how to do it in the first place, and then it's going to take them 3 or 4 days to do it. Whereas AI could get the whole thing done at, let's say, 80% of the quality that I need in about 15 minutes. That seems like a no-brainer. So I do think that plays a part, but I also don't think that accounts for all of it. There is definitely a slowdown in not just in the economy, but in the forecasts for how a lot of business leaders are projecting things are going to go, and that's going to impact hiring as well. I don't like saying this, but it's not going to get any better anytime soon, as far as I can tell.
yeah, yeah. And listen, I agree and think finally, I'm going to say finally, the stock market is reacting to this, and as well as gold, which we'll get into the charts later. But yeah, I think the market is slowly, thinking, oh no, we might have troubles ahead. But yeah, listen, in terms of Wednesday data, nothing really that popped up that, really surprised me. The German data usually is, I'd say, very, very accurate in terms of consensus. We very rarely see surprises. So yeah, nothing of interest on Wednesday. Um, Apart from obviously the biggest factor of all is the government shutdown, right? We officially came out of it yesterday. So, the market's reacting as it's reacting. By the rumor, sell the news, do you think, on that regard? Because we had a lot of
I
positivity,
mean,
right?
yeah, I think it's a little bit more complicated than that, and I actually don't think that plays a very significant role, to be honest.
Yeah,
I think, I think what we're seeing in the short term, at least, is that there is some technical going on under the hood, but talking about more of the macro stuff, like, do I think it's buy the rumor, sell the news? I don't know. I don't think it's quite that simple. There might be a little bit of that, but
yeah.
I think it's more to do with, oh, what? You guys aren't releasing any economic data for the month that you were shut down? Like, it's that bad?
Yeah,
Like, I think that's more significant than, than the shutdown kind of reversing. But
yeah,
um then on a technical basis, like, we had gamma exposure flip. Not to get into the weeds on what all that is, but basically it means that market makers now have to do some trend following trading more so than kind of fading trends. And that
yeah,
adds some technical fuel to the fire.
yeah, yeah, yeah. Yeah, obviously, of course, that there's always a little bit of complexity. I think the complexity of, yeah, none of the numbers for the month are going to be ever. We're not talking about, maybe a month later we're going to have revisions. They're not going to be ever released. Um, yeah, I honestly, I think it's crazy. Um, yeah, calling competence, I think it's gross misnegligence, at the least, fraud at the worst, quote unquote. This is just my opinion, of course, but yeah, we'll see later on how that will affect the economy. Once we get those November numbers, right?
Yeah.
Um, Listen, in terms of Thursday, yeah, Thursday numbers. It was mainly the UK statistics, and again, shock horror. All of them were below consensus. UK economy is struggling really, really hard. I'm seeing, speaking to people that own businesses in the UK, and they're having one of the worst years in, decades, which is never really a good sign. Especially when it comes to recruitment. Although, not a lot of people like recruitment for whatever reason, blame the recruiters or blame the industry. The recruiters give you a really, really good indicator on how the economy is doing in terms of hiring. If there is, loads of vacancies, recruiters are making loads of money, it usually means that, the economy is either doing relatively well or doing really well. But I've had so many people, becoming redundant in the last couple of months within my connection network that I'm thinking, yeah, this is just the beginning, the beginning of a massive fall in the UK. I mean, have you heard anything from your side in terms of your connections, Imre, about the UK, or you don't really care?
It's miserable. Like I'm not hearing, but I will say that the sentiment that it's been miserable has been consistent for the last 3 4 years, 3 4 years, I would
Yeah,
say. So maybe that sense of misery is accelerating, which is a very British thing to do, I guess. But
yeah,
uh, yeah, it just doesn't look good. I had a cousin of mine who moved to the UK for like an entry level job, what, beginning of the year ish, and
yeah,
I cautioned her against it. uh, frankly. But it was kind of this romantic idea of being in London and all
Yeah.
of that, which I understand. And she's young, so it's fine. But if you're considering uprooting your life to go to London for a career change, oh my goodness, what are you doing? Don't do it. Don't do it. Unless it's like you're so irreplaceable and that company is so rock solid, like I just wouldn't do it. You have an issue with wages, you have an issue with employment numbers, and you have an issue with cost of living. Like that is not a good combination of toxic variables, all colliding together.
Yeah, you're pretty much spot on. And if someone asks me whether moving to the UK would be a good idea, I'll tell them to give the head a wobble. Um, you know, and I'm saying this in in a jovial way. However, given the data and given what's happening, especially, when the US, even though with all its debt and, all the other problems, the US and it's in 100 times better position than the UK. Um, so if you had the options in terms of moving to a specific country, yeah, I wouldn't even think twice. But hey ho, she'll learn hopefully from her mistakes. Um, I hope she's going to have a great time in the UK, especially in London. But yeah, I'm just not seeing anything great coming out of London recently, anyway. Um, Apart from that, yeah, Thursday was a little bit quiet. I haven't seen anything. Oil stocks change. Yeah, there's a massive build up. Not surprising, given what's happening on the market. The massive slowdown that we're seeing. Yeah, we're not going to see big drawdowns in oil. That's just how it is. So I'm gonna say that the prices on oil are going to be subdued for a little while. I think the only reason why oil will go up is either through potential wars coming through, escalations in conflict, or we actually going to start seeing countries coming out of recession, and in particular China, because once China gets going, the entire world will get going, because obviously, as you mentioned, China is the biggest exporter for now. And then if Europe, start buying inventory, it means that there is, more demand. But yeah, for now, we're not seeing that. Friday, anything in particular I wanted to talk about? Not really. I mean, the GDP in Europe year over year, 1.4 versus 1.3. Woohoo, nothing to brag about. Could be within the margin of error, to be fair, in terms of statistics. And then, yeah, we were supposed to receive, PPI and retail sales. We are definitely not going to get those. So, yeah, I mean, anything you wanted to have a chat about in terms of stats at all? Before, I wanted to touch very quickly on one more topic before I'll give you a way to the charts.
No, no, nothing else from me on numbers.
Okay, cool. So yeah, crypto guys or gals, or however you want to identify yourself as, yeah, Bitcoin broke the 100K mark. I expected it, to be fair. I really did. I've been saying that, Bitcoin isn't going to hold 100K. I'm expecting Bitcoin to get to at least 90K. Um, it doesn't surprise me. It's a highly leveraged market. Any drops that go on, you get instant liquidations. We're talking millions, 200, 300, 400. I think over the last 24 hours, I saw an unusual whale that it was about $1 billion in the last 48 hours that was liquidated, which is kind of funny, to be fair. Just just tells you how the market's so inflated that you get $1 billion just wiped out in a matter of hours, and there are still loads of buying available. And it sort of shows by the money supply that we have, both in the US, which is at 8.2 trillion, close to all-time highs. You got the Chinese as well, pumping money into the market. So yeah, it doesn't surprise me at all. But we're seeing those panic headlines. Oh my gosh, 96K, what's going to happen? Yeah, I think there's a lot more crying to be done before a rebound. I mean, what are your quick thoughts on the Bitcoin breaking 100K?
I don't think 100K is like a magic level by any means, other than the fact that it's like a nice fat round number.
Yeah.
I still have I've got two scenarios in mind for everything in there. One's always bullish and the other's bearish.
Yeah.
I will say this, like it is getting close to do or die time for Bitcoin.
Yeah.
Um, and by that I mean, like, if we don't see a bottom very, very soon within the next few days, then I'd be inclined to suggest that a major cycle has completed. I'm then looking at the 70,000s, high set, like mid 75, yeah, about 75,000 or so. Um,
Do you want to show your
is
charts
there
right now? Or
potential?
have you got the charts open?
Yeah, I do. Yeah, I've got the
Yeah,
charts
yeah,
open.
yeah, yeah, yeah. If you share your screen, we'll be able to hop onto your charts, no problem at all. Just let me know when.
All right, they're up.
1 second. Not seeing it yet. Oh, I'm seeing it on my screen. Oh, there you go. Yeah, we've got it. We've got it. Let
All
me
right, cool.
just pop that here or that. Cool.
Okay, so here's the really interesting thing with Bitcoin, right? I don't love trend lines, but if
Oh,
when
Tory
they're very
trades
obvious,
coming out with trend lines.
but when they're very obvious, they're worth considering. Okay, now
Yeah,
now the reason trend lines do play a role in the realm of technical analysis is because you have to understand that so many people do look at them, right?
yeah,
And when so many people look at something that has two potential outcomes. One, it's kind of like, oh, that's so obvious that it's unlikely to play out the way that the textbook says it's going to play out. That's one way. The other way is that, oh my goodness, we broke that trend line and everyone sees the same thing and everyone's rushing for the exits.
yeah,
What you mentioned in terms of the highly leveraged nature of crypto, that is very, very, very important. The reason that's very important is because panic is magnified, right? So we all know that leverage amplifies both gains and losses. I can tell you right now, it's the losses that are being amplified. So
yeah,
what what happens next could trigger a liquidity cascade. I mean, it could trigger a liquidity. It already has. The
yeah,
issue with
definitely.
crypto, my issue with Bitcoin as a store of value is simply that the underlying is too volatile, right? Or crypto as a store of value is that the underlying is too volatile. The underlying
Yeah,
being Bitcoin.
agreed.
And when you have something that's volatile, it doesn't become a store of value. It becomes a vehicle for speculation.
Yeah,
And I don't think anyone, I mean, I'm sure some Bitcoin maxis or crypto evangelists will disagree, and that's okay. Like, I understand your argument, and I don't disagree with it entirely. I'm just saying, from my perspective, when you have something that is like Bitcoin, and I don't think the comparison of Bitcoin to gold is necessarily fair to gold in some ways. Again, I understand the argument, I understand the nuance, but I've never been a crypto guy. I've never really been a Bitcoin guy. Do I have like a token amount? Yes. Just so I can say I have skin in the game. So if it rips to $1 million, I don't look like a complete idiot. Okay,
yeah, yeah,
that's literally the only reason. But I've no allegiance to Bitcoin spiritually or emotionally or financially. And if you are all in on an asset class and you're counting on that asset class to make or break your financial future, live by the sword, die by the sword. That's all I can say. I'm not saying that people haven't gotten stupidly rich. I have a decently good friend of mine. I say decently good because he's abroad now and we don't talk as much. But he's made he's made 9 figures in crypto. I do not have a 9 figure net worth.
it's not too bad,
Unquestionably,
is
he
it?
has done unquestionably he's done extremely well with his
Yeah,
cryptocurrency investment. And to his credit, he's liquidated most of it, so he's
Good.
quote unquote safe.
Yeah.
But that is literally the exception of the rule. He was
Yeah.
not. I hope he doesn't mind me saying this if he hears this, but he's not exceptionally uniquely intelligent or uniquely gifted with some kind of insider insight that nobody else has. He got lucky. He bought a lottery ticket and hit the jackpot.
Yeah.
Okay. So if you are invested in anything, crypto included, understand what you can do to protect yourself and know where your risk lies and understand whether or not that risk is acceptable to you or not. It's shocking to me how many people are blind to the risk. But the higher a market goes, the more blind people get. And
Yeah.
interestingly enough, the higher a market goes, the more people are willing to buy on the offer, meaning they're willing to buy high in the hopes of selling even higher. That is not sustainable. Have we seen an end to this cycle? I don't know. This trend line is, I must admit, very convincing. We still have 16 days to go in November.
Yeah.
As far as like supply and demand goes, the reason I've got 70,000 and we're all the way out on a monthly chart. Let's go to a daily chart so you can see the small level that we're talking about here. But we can see here, you know, classic resistance to support, right? So that's an area I'm watching very, very closely. This is an area that I think is, again, so technically obvious to people that are watching charts. And frankly, that's kind of the thing with Bitcoin. What else can you do but watch a chart? You can look at volume flow and order flow and all that as well, yes. But again, I think keeping it simple here with Bitcoin, it's pretty obvious where the support is, where the demand lies.
Yeah.
Um, is there necessarily a straight drop between now and there? No, there's going to be some stuff in the 85 region that could capture this, but this is do or die time. This is do or die time. There's a very minor region of previous demand here, very minor. You slice through that, you're headed for the 85s. Slice through that, you're in the 75s. So there is a lot of stuff that could catch this as a falling knife. Um,
Yeah.
but be careful out there. If you're leveraged, you're probably feeling a lot of pain right now.
Yeah, no, I agree. I think that the biggest problem with Bitcoin and the crypto sphere as a whole is just the market cap. We look at the entire market cap of crypto is just under $2 trillion. Compare that to the gold market, and we're talking 20x. And we've seen how gold reacts, right, in 100, $200 clips, right? It kind of trades like a meme stock. So as I say, the downside, yeah, it's cushioned by certain levels, but when you have the market cap as low as it is, there's not enough liquidity. So unless big players start buying and buying heavily at the support zones, yeah, I'm gonna say that there's a lot of pain that's going to show up very soon, and a lot of people crying on Twitter.
Indeed.
So yeah, listen, let's jump into the other charts. We've we've put the fire down on on a lot of the bullish Bitcoin holders. I mean, yeah, let's talk about Nasdaq and in terms of what it's doing right now. I'm gonna say it's doing quite interesting moves, especially on the daily. We've seen some really, really good rejections, but yeah, when you start scaling out on the weekly and monthly, it's kind of funny, right? Everyone's panicking, saying, "Oh my God, it's the end of the world," but we're not even here. I mean, what are your thoughts?
So now I'm gonna draw on some auction market
Yeah,
theory.
go ahead.
A market is going to continuously move through these cycles of being in a state of balance to then moving into a state of imbalance, upon which the market is now in discovery of new fair prices. Once
Yeah,
the market finds new fair prices, we're going to re-enter into an area of balance. Right now, this works on the way up, works on the way down. So for instance, this is just a very basic example. Here we can see that the market was in a state of balance, right? That's the 2022 bear market, right? And then the market here started to shift out of balance. and then we were in discovery of new fair prices. At a certain point, buyers and sellers said, okay, call it a stalemate. Buyers were no longer willing to buy on the offer, right? Sellers were able to rotate the market back towards an area of prior demand, and then buyers were happy to buy on the bid. And then the market started to go up again. And
Yeah.
then we had this beautiful area of balance, right? We had the April lows, Tariff Liberation Day lows, I think. And then the market has been in a state of imbalance on the monthly chart ever since. So what's next? Balance, right? So here's the thing. Balance can mean here. It can mean here. It can mean here. It can mean here. And I can play this game all day. So
Yeah.
balance does not mean a shallow pullback, a sideways consolidation. That's just what balance has meant since the start of the last major swing in this bull market, which is, I think, the end of October 2022. Okay, so keep that in mind. We have been one time framing up on the monthly charts. What is one time framing up? It's very simple. It's when each subsequent price bar does not break below the low of the price bar preceding it, right? So we can see we've been one time framing up with regularity here since those April lows.
Mm-hmm.
One time framing up is a sign of a strong market. It's a sign that the market is still in a state of imbalance, right? But what do you notice here? This was very interesting. This was a market visibly slowing down, right? So now we have the monthly one-time framing level on the NASDAQ at 24,158. Okay, that is a very, very important level. We take that out. The bull market, by definition, in my opinion, from a value perspective, is not the bull market, but this leg of the market being in a state of imbalance, bullish imbalance, is over.
Yeah.
By
Okay.
definition, it's over. So whether we rotate here and go sideways and then go higher, or whether we need to rotate even further into a prior area, larger, more significant area of prior demand, is unknown. And this is
Sure.
why again, I making market prognostications and saying this is exactly what the market's going to do, that's a very silly game to play. There are always multiple potential paths the market can take and
Yeah.
route to an outcome. Okay, so
Yeah.
it's more important to think of the market in terms of Bayesian probabilities. In other words, as new information comes to light, how does that information shift the probabilities of one outcome versus the other? Okay,
Okay.
so to me, this level is very, very important for bulls.
Right.
24,158 in NQ.
Yeah.
Very, very, very important. Now, if we're looking, let's see, I might have to adjust the settings on
Yeah.
my
So whilst you're looking at that, I've
profile
got a
here.
question. Do you take seasonality trends into consideration? Because obviously, when you look at historical and statistical data over the last 30 or so years, the probability of a market going up at specific times of the month because of obviously rebalancing and also the holidays, so on and so forth, obviously thin liquidity. We also like to, call what's been known as the Santa rally, right? You have you have the October or sort of September is usually, statistically speaking, due to historical data, usually have a bit of a slowdown, and then at the end of the year, you tend to have a bullish market because you have your investment funds doing tax write-offs and so on and so forth against your losses. So they tend to buy more stocks that are dropping hard and so on and so forth in order to then rebalance for the new year. Do you think that will be a consideration to take for for December as well, or do you think there are more stronger things at play, given what's happening this year, and that we might see a little bit of a different outcome?
I think seasonality is important for certain commodities, particularly agricultural ones, where there is
Yeah.
a clear causational link
Uh-huh.
between, I mean, this is just a very obvious example, but something like corn has a harvesting season.
Yeah, of
Okay,
course.
like that's pretty straightforward. Um, Now, you could argue that there are, as you just mentioned, there are certain events that tend to happen on a seasonal basis just because of uh, financial constructs around them, like tax seasons and so on. I I buy that to a point, but to answer your question in a very direct manner, no, I don't pay attention to any of that stuff, and here's
Okay.
why. In a normal market, i.e., one where there are no shocks, there are no macro narratives that are overtaking the seasonality narrative, then sure, the seasonality narrative is the one that might drive the market. Now, the famous last words of any market analyst is, but this time it's different. And I think instead of thinking of the market through the lens of what's different this time, you
Yeah.
should not be, you should be thinking more so in terms of what is the narrative that's driving the market right now. Now, for instance, there might be so many causal reasons why the market should typically be bullish in November, and I think historically the market is in fact bullish in November. But what if everything else is overriding that? What if unemployment is at 12%? What if there's a deadly
Yeah.
virus sweeping the nation? What if
Yeah.
what if New York lost all power for a month straight?
Yeah.
Like those things would be so much more powerful of a driving force than
Yeah.
the seasonality narrative, right? So
Yeah.
it's important to take those things into consideration. Do I think we're at the point where one narrative is overriding all of that quite yet? No, no, I don't. We've got 14 days left in this month. However, NQ is down nearly 5% on the month, which is stunning to see relative to this crazy expansionary move to the upside. We haven't had a down month in since April, which is absolutely nuts. But look at that
Yeah.
April candle. This April candle looked completely bearish at one point,
Yeah.
right? So to suggest that we can't reverse in 14 days would be silly for me to say.
Yeah.
What I'll repeat is I'm looking at that 24,158 level. Now here's the other thing. If we look at the volume profile, we can see that we're coming into this low volume node.
Yeah.
Here's the reason why markets will reverse very sharply from a low volume node. It's because if a low volume node in a trending market is not defended, the market will slice through that low volume node very quickly. Why?
Yeah.
Because there's no volume to support the market. So
Yeah.
that is why you'll see markets reverse out of low volume nodes in a strong market. You'll see that happen over and over and over again. And the reason
Yeah.
for that is because buyers need to defend those low volume nodes. Otherwise, those low volume nodes get crushed.
Yeah.
So as we're entering this low volume node, I'm extremely interested to see who shows up. Who shows up to the rescue? Right? The plunge protection team that people kind of somewhat jokingly talk about with American equity markets is a real thing. That is a real thing.
Yeah. I do agree.
And
Yeah. Yeah.
I guarantee you that in the past and in the present, past administrations, this administration have definitely had talks with certain firms, the biggest ones. I don't have to name them,
Yeah. Of
to
course.
help support the market. Now, can that work on a short-term basis? Yes, it can absolutely. That actually can work on a short-term basis. It absolutely can. Can it work on a long-term basis? No, it can't. Right. So we'll see. We'll see what kind of games are about to be played, because there will be some games being played. I can virtually guarantee that.
We
Let's see what
already seen
happens.
it. We are already seeing
Right?
it with the data, right?
Yeah. Absolutely. So again, I hope you understand that the way that I'm looking at the market, I'm not necessarily looking at it from, oh, I'm on team bear or I'm on team bull. It's more
Yeah.
about, okay, at what phase of the auction are we in right now?
Yeah.
I think the odds favor an end to the current imbalance phase, and we're about to enter into a slightly more balanced phase for the time being. Now that could accelerate, right? Like we could very briefly find balance here. We could go sideways for a couple days, and then boom, we could go to imbalance. Then we can go sideways for a couple days, and boom, we can imbalance again. And then that's how you get a bear market. That is absolutely possible. Now here's an interesting thing. In the S&Ps, I don't know about the Nasdaq. In the S&Ps, from the lows in April to the highs is like an over 40% move. I'd imagine it's greater than that.
Yeah, something like
That
that.
is
At least.
nuts.
Yeah,
That
that's
is
insane.
absolutely nuts. So from trough to peak in NQ, we've gone up about 60% without a
Yeah,
meaningful correction. That's not normal.
no,
This is healthy. This is so healthy. The fact that people freak out, right? Or the fact that people are freaking out right now tells you a lot more about the bulled up nature of this market. The other thing I want to say is that, and I'll put myself in this camp, I've really only started my trading career. I placed my first trade at the tail end of the global financial crisis.
yeah,
Tail end. So I can't say that I traded through the GFC. And I've been in this game relative to this, millennial and certainly the Gen Z generation. I've been in this game longer than I'd say 99% of people in my generation and of Gen Z.
yeah.
So I've been in this game quite a while relative to that. Relative to people like my partner Andy, who has traded, I mean, he made his bones on Black Monday, right? 74. He's seen different market regimes. I think we're about to find out what all these prop traders are really about on the retail side. We've been blessed. We've been blessed with some of the best trading conditions in the history of trading conditions.
I agree. Yeah,
Right. So from a personal standpoint, I'm curious to see. We're about to see the wheat separated from the chaff, I think.
yeah, yeah. I think so too. I think true volatility is coming through. Those who've seen sort of volatility ish during the tariff war. I think yeah, that's just the beginning. I think we're going to see much more peaks and troughs than we initially imagined, which, as you mentioned, I think is going to weed out, in terms of retail mindset, right, where you just buy at lows. I think it will have to take a little bit more of thinking, and in order to do that, I think there's going to be a lot more weeding out uh, from the industry perspective, which I think is good, right? I think it's much needed. We've seen on socials, you and I, individuals who claim to make insane amounts, and it usually comes down to either faking it or yeah, just having a market where all you have to do is just press buy and close your eyes, right? I think there's going to be a little bit more thinking involved in terms of levels, in terms of where the market's heading, and yeah, hopefully we will see that at the start of 2026. But you never know, right? It's one of those things that yeah, you can predict, but you can never expect.
Yes. Yeah. 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 I think that's a fair way. I think that's a fair way to put it.
Anything else that we should talk about? I think gold, right? Just before we end here, because yeah, the training session is a little bit interesting, so I'll let you go. But yeah, from gold perspective, right, I didn't expect it to have such a rebound, after the government reopened. Yes, did I expect the rebound myself? Absolutely. I thought that 4,000 level was so strong, and I was just thinking, there's no way gold's going to break 4,000 just yet. So I did expect, maybe a $50, $100 rebound, but yeah, the rebound was quite extraordinary, and it's holding the key levels right now. The 40-50 area, 40-30 area. I'm in the position where gold is going to reach all-time highs again next week. I may be wrong. So yeah, this is just for educational purposes only. But yeah, I'm seeing strong support at that 4K level. If that breaks, God's in trouble, in my opinion. What do you think?
Yeah. I mean, the safe haven right now seems to be bonds and yen, um, and Swissy
Swissy, yeah,
and
Swissy
Swiss.
has been super
Yeah.
strong.
So the thing with gold, okay, so the thing with gold is I think I talked about this last time we were on. I said pay attention to this value area, right? The
Yeah, you
value
did.
area low, the value area
Yeah,
high. We got the breakout. Okay, so what we failed to do was break beyond the value area high of this leg to the downside, right? Now, does that mean that we have to take out the low and make a new low? Not necessarily. I would agree roughly around 4,000 is the important level. Another way to think of the market through an order flow lens is the market likes to move from a high volume node into a low volume node towards the next high volume node. And that's kind of what we saw here. So this was the high volume node. We went through there. Now we're in the next we went through this low volume node, and now we're in the next high volume node right here. So below that, I mean, I'm only profiling since about here. If I profile down there, I would imagine, just visually looking at the price chart, you would get a
3,800, I
bit of a
reckon.
high volume node. Sorry?
I'd say 37 to 3,800. That would be the
Yeah, I would
next.
agree, right? Yeah, I'd agree. I'd say we probably have a high volume node there as well. And let's just validate that. Yeah, right here, right? So,
Bingo.
yeah, below there, yeah, gold would be in trouble. We've got the 3900s, the 3800s, and then the
Yeah,
3700s. I mean, that would be a huge move akin to, a collapse. But you look at this, and you look at this, and it's like, yeah, all right, that's commensurate. What I will
yeah,
say, though, is that the pickup in volatility is an order of magnitude greater than what we saw on the way up in terms of rate of
yeah.
change. So that
Agreed.
is a little bit concerning if you're in precious metals.
Yeah,
Does this still have one more high in it? Honestly, I do. I don't think gold is done. But even if we break below this low here, I don't think gold is done necessarily. Like I think there will be demand here, and I think gold will actually be treated as a safe haven ultimately once again, right? So
yeah,
so the important thing to understand with the U.S. and what's happening with the U.S. right now, even as the U.S. market is crashing off, right? Like crashing off is a very mild term, but
yeah,
relative to what people have been conditioned to expect, as the
yeah.
market is crashing off, right, the US is still the ultimate safe haven. So we will
Correct.
see demand for bonds. We will see demand for the US government, as it
Yeah.
were, right? And that is kind of what's happening now. So the last chart that I want to pull up, very basic chart, we're going to look at TLT, 20 plus year treasury bond ETF.
The smart
Okay,
money, as
so
people like to call
TLT,
it.
yeah, and this is not a pretty chart.
No,
I mean, we're languishing
disgusting.
near lows, right? Yeah. So that tells you something about how much demand there actually is on a long-term basis, right? It's not great. But if we see this as a range, we're somewhat near the bottom of that range right now. A move to that top of the range would send the world reeling, just for reference. That would be crazy. Look at the last time we had that move, right? It was that December 2023, Jan 20. Oh, that's interesting. I would have expected a pickup more so in 2022. Yeah, this is the 2022 bear market. The last time we had a major pickup should have been, yeah, there we go.
Yeah,
April. We had
that
that
candle.
spike
Yeah,
high.
yeah,
Yeah. Right. So, a move towards the top of that range would be likely coincidental with the stock market selling off a lot more aggressively, and Bitcoin potentially vanishing.
yeah. I agree. I think we're in this situation right now where, as you mentioned right at the start when we were talking about the the S&P levels and the NQ levels, I think we are discovering new ranges, and because of that, I think we're going to have a little bit more more frequent volatility. And a little bit more dangerous volatility in terms of there are far more leverage markets that there were 15, 20 years ago with the ETFs, right? With how many ETFs we've got now for absolutely everything from crypto to energy ETFs, times 3, times 5, times 10, times I think I've seen times 20 leverage in some areas, and obviously Bitcoin with hyperliquid, you've got times 100 leverage. So I think what we are going to see, in my opinion, we're going to see a lot stronger moves, a lot quicker moves, and a little bit more unpredictability. You said it multiple times, Ryan. It's something that we discussed comparing retail versus institutional, where the retail sort of thinking, okay, I'm going to predict the price that we're going to get X in 2-3 weeks without looking at the charts and seeing what's happening. I think we're going to see more of that retail mindset of, okay, I'm going to predict that we're going to have Bitcoin back to 110k within the next 2 weeks. So I'm just going to pile on the 100x leverage on hyperliquid and hope I don't get liquidated. I think we're going to see that. I think that's going to spur the sell off. I think once the panic reaches its maximum peak, I think Warren Buffett was a perfect quote, and I can't remember the exact quote. Can you remember Warren Buffett's quote? Um, Oh, I can't remember. Can you remember it when he said about, when the panic size peak, that's when you buy? I can't remember the exact quote.
I mean, he's had a few, like be
Yeah,
fearful when others are greedy, when others are fearful, something like that.
yeah, something like that. I can't
My
remember.
favorite, yeah,
Go
my
on.
favorite quote of his is the something along the line of the market is a vehicle for transferring money from the impatient to the patient.
Yeah, yeah. I think that's it. That hits the nail on the head too for a lot of people, right? And I'm trying to learn the options market. I've been doing a lot of research over the last week. Understanding options and how they work and why they are so much more statistically probable when it comes to reaching specific price targets rather than just looking at charts and wicks and the candlesticks or whatever else you use, right? It's a completely different market, completely different way of approaching the market, but I do see a lot of benefits of looking at options, especially over the last week. When you look at options and when you look at the spot prices, I think you can I've been really trying to understand the max pain of certain options, the quad witching events and so on and so forth. I've been doing a lot of research into that, and it's helping me understand, where we can see specific buyers and specific sellers come into the market at X or Y prices, which before, when I just used to look at spot, CFDs and futures, and I did use level two data. To be fair, it's been eye opening. And I do recommend Imre is an options god in terms of understanding the market from that perspective. But yeah, just for anyone that's trading spots and CFDs, I cannot recommend enough to start looking at options, and just from an educational point of view, seeing what difference it can make to your spot trading. Because from just understanding it alone, right? So not taking positions into consideration, like understanding the flow of the market has been really phenomenal. When you initially got into options, Imre, did you see that as well from your perspective, or did you see something else?
I was extremely resistant to go into options. I started off as a spot trader, through and
Yeah,
through. Uh,
yeah.
and Andy really had to twist my arm to get into options. And I can tell you that my hesitance to get into options was entirely ego driven. I was a good spot trader. I don't think I'll make the claim that I was a great spot trader, but I was a damn good spot trader. Um, and I thought, you know what, I've got something that works. Why do I need to start all over again as a complete beginner at options? So I was resistant to it. When I really just got over the fact that it was my ego talking, and I had to kind of humble myself and accept that I'm getting into a different side of trading that I know nothing about. It totally blew my mind. And how Andy enticed me to options was by saying, look, you don't need to be an options trader, but understanding options is going to make you a phenomenally better spot trader. He was entirely right about that. The a lot of people, dismiss options for I think the complexity and the learning curve involved. And I'm not going to lie, it is more complex than spot. If the spot market is checkers, options is chess. There's no doubt about that. The added dimension of time and the increased leverage that option provides makes for some very interesting math to take into consideration. Now,
Yeah.
what I will say today, I'm much more of an options trader than I am a spot trader, and the reason for that is not because I can make more money with options. It's because I can lose a lot less,
Okay.
and that's such an important distinction.
Yeah.
My obsession right now is to keep my drawdown as minimal as possible and have the best risk adjusted returns I can possibly deliver
Yeah.
for both my investors and for myself and for and for the when I say myself, like the proprietary funds that we also trade. So
Yeah.
that is my entire mandate: deliver strong risk adjusted returns. Options gives you such a granular level of control over your P&L that spot trading by its very nature cannot.
Hmm.
The other thing is that you can use options trading to enhance your spot trading. So for example, the way that I structure, I have to trade spot every day. It's just the nature of how my options trades are structured. But I trade spot fearlessly because I don't, this might sound weird, but I don't have a stop loss when I'm trading spot. The reason I don't have a stop loss when I'm trading spot is because I have options that back me up. And my position sizing in the spot market is not determined by the nature of the setup I'm trading. It's determined by my options exposure. So everything is a lot
Yeah.
more systematic. It's more mathematical. It's very clearly defined. And
Mm.
that is just a wonderful way to trade because I don't have to guess anymore. I don't
Yeah.
have to guess. I know exactly what I'm doing because the options market is telling me what I'm doing.
Yeah. No,
So
that makes sense.
yeah, I now all that said, like I would not consider myself an options god. Not, I've been trading options for many years now, and I find that there's always something new to learn.
Of course.
Andy is by far the most knowledgeable guy on options, and I would argue probably one of the most knowledgeable options guys on the planet. He had to write his thesis when he went to Wharton, an MBA on options. So he actually invented a model for how options should be priced, specifically for currencies, actually. But anyway,
Yeah.
like, it just goes to show how much of the actual academic work he's done in addition to the practical trading work.
Yeah. No, makes sense. Well, listen, obviously the market is open right now, so I'll let you crack on with the rest of your Friday. As always, it's been a pleasure talking to yourself and going through the market and yeah, giving people a little bit more of an insight. As always, if anyone needs any information from any of us, you can reach out to both of us on Twitter, mtradernex for myself and Imre SG for Imre on X. Yeah, fire away if you've got any questions. As always, if you leave a like, comment, and subscribe on the video, always appreciated. And yeah, thank you very much. Enjoy the rest of your weekend and have a good one, Imre. Speak soon.
Cheers, you too, Matt. Always a pleasure. Take care.
Take care. Bye.